Hi everyone, welcome back to the Accounting and Tax Help Desk, a podcast produced by Alamir CPAs. My name is Haas, your host this week. Today we're gonna talk about how business owners should pay themselves, how to assess the numbers. Paying yourself is very important decision, and it basically depends on your personal finances, taxes, your cash flow, and if you don't pay yourself enough, you're gonna suffer on personally, and also if you pay yourself too much, your company can suffer. So you need to find a balance, and finding that balance is very important. The few ways a business owner can pay themselves, it's usually through the salary or an owner's draw or a distribution, and each has its own tax complication. It depends on your size of the business, it depends on your type of the business, but these three form of the cash payments, like a salary, distribution, and draw, are the only ways you can pay yourself. The biggest mistake I'm seeing all the time is that people don't pay themselves. They think, okay, I need to keep the money in the company and grow the company, and that's fine. But on the other hand, they suffer personally, and they use the credit card for their shopping. They get the loan for their personal finances, and that's gonna suffer them personally, and the business is growing. So that's the biggest mistake I'm seeing everyone, and I tell everyone, you cannot. The whole point of having a business is to have the financial freedom. So make sure you pay yourself appropriately, not too much, not too little, so you can actually achieve your financial goals personally too. There is no universal number. There is no percentage. There is no standard of how you pay yourself. It all depends on your personal finances, the industry you are in, the business revenue, business expenses. There is no set number and the universal number. So, and the challenge is to finding that balance. And usually, business owners try to find that balance themselves, and they are not factoring the future cash flow of the company. So, it's usually the best thing is talk to a CPA, talk to your CFO to find that balance and start paying yourself. The business structure is another important factor of paying yourself. If you're LLC, you can basically withdraw from the company. It's a pass-through entity, so you can basically transfer money from your bank account to your personal account, from your business account to your personal account. If you are S-Corp, you have to pay yourself a salary, and that comes with the payroll tax, and the salary and payroll tax usually goes on the profit and loss statement and reduce your taxable income. And also you can pay yourself as a draw, which goes on your balance sheet. But if you have a C corp, you're gonna get to the double taxation situation, that you need to get the basically you cannot make that decision yourself. You need to talk to your CPA or CFO how the best way to pay yourself, and that's a specific corporation, C corp. So basically, it depends on your type of business. LLC, you can pay yourself a draw. S corp, you can pay yourself a salary and a draw. And if you have any question on how to set up your business S3 structure, your company, feel free to reach out at helpdesk@alamircps.com. We are happy to help you and manage your business. If you pay yourself incorrectly, for example, if you pay yourself too much, your business gonna suffer because you cannot fulfill the business obligation, and personally you might have lots of money. And then if you pay yourself too little, your business has a inaccurate cash flow number. Like, you're overestimating your cash in the bank without considering your personal expenses. And when the time comes and you have to, let's say, buy a car for your teenage son, you have to withdraw from your business, and suddenly your business gonna drop massive amount of cash. So it's basically affect your future cash flow if you're not planning it correctly. And paying yourself too little, it's give the IRS red flag, and it's basically they're gonna audit you. And IRS has a very vague language on this. You have to pay yourself a reasonable amount, and they are not saying that amount is. But if you are an attorney and you're running a law firm, you're probably gonna have a good level of income, and you need to pay yourself reasonably. And that's because they want to tax you on your 1040. based on your income. If you are paying yourself too little, they kind of question your math, so they're gonna ask lots of questions and they're gonna audit you. So again, you need to think as a compensation package. If you're paying yourself, it comes as your salary and withdraw and everything. But the other two way that you can pay yourself without any uh, tax consequence on your personal side is paying yourself through the health insurance. Basically, you gonna purchase your health insurance through the business account, gonna reduce your taxable income, and also you're gonna have a coverage for yourself and the family and your employees if you want to. Uh, the other way you pay yourself is through the 401k. You basically gonna reinvest some of your money that you're gonna pay yourself to the 401k plan through your payroll company, and that's gonna be before tax number. So it's gonna reduce your taxable income, and then it goes to the investment account, and you cannot touch that money until you get to the 59 and a half years old. And based on your tax bracket, you're gonna get taxed at that time. But there are ways to reduce taxes when you get to the 6 years old age. But think as a compensation package when you trying to pay yourself, not only the monthly payment. The best way to balance the compensation and reinvest the money and paying yourself is through the cash flow management. We speak about the cash flow management in the last few episodes. Check it out. You have to budget everything. You have to have a roadmap, and you have to have a cash flow management. If you have this accurately on your business side and duplicate the same concept to your personal side, you can understand, okay, how much money you need to run your business, how much money you need to run your personal financial household. So you cannot do that without any planning and cash flow management and forecasting. For example, you're gonna pay a lump sum of $10,000 for your life insurance every month or every year. Uh, that life insurance payment, it's gonna hit you on your personal bank account. So you need to plan ahead. Okay, I need to transfer this amount of cash from my business to your personal in the October or December or whatever the due date is to pay your life insurance company. You cannot do that without planning that or creating a cash flow. You cannot fly blind, basically. Bank and lenders also look at the compensation. Your business bank or business lender gonna look at the documentation. Is it consistent? Is it documented? If they're gonna pay you a loan, a business loan, they're gonna look at your personal credits and how much you're gonna pay yourself. Your personal banker is gonna look at the same document, but they wanna see how much you're getting into your household. The reason is if you wanna buy a house 2 years or 3 years down the road, usually the mortgage company or the lender gonna look at for 2 years of tax return, 2 years of income, and if you pay yourself too little, they cannot give you money. And if they give you money, they give you based on your business revenue, and that's usually it's called a statement loan and has a higher interest. So you don't want to get to that position. You want to make sure your personal banker and the business banker are happy and they are looking at the same document, consistently documentation, and if it affects your personal financial. Just to piggyback on my previous comments, we had a client who tried to buy a house for the longest time, and although he had a really good revenue, the business had a really good revenue, they couldn't give the loan on the personal side. And the reason is they look at the bank statement and say, okay, you transfer random amount of cash to your personal bank account. We don't know if you give you a loan, you can pay yourself you can pay the mortgage every month on time. So we had to put a pause on purchasing a house. We had to reorganize the company. We have to put in place the W-2s, K-1, making sure every single month he gets enough money to prove to the company, to the lender, that he can pay the mortgage and also can support his family. It took basically 2 years to get there to that position, but he got the 4% interest loan and buy like a $2 million house in Calabasas. The seasonal industries usually tend to pay themselves very little because they don't know how much they are getting every cycle. If you are in the creative industry, creating content for the influencer, uh, they get the revenue usually. They have an inconsistent revenue, so they tend to pay themselves too little. On the other side, I saw the real estate agent who get the like a big sum of cash at the like every few months. They pay themselves too much. They reinvest that money on themselves. They have a lavish lifestyle. So it depends on the industries, but in as a rule of thumb, if you are in the seasonal industry, usually the owner in the seasonal industry they pay themselves too little. A business owner need to review their budget and forecast every quarter. We explained that in detail in the last two episodes. Check it out. But you have to review your budget and forecast every quarter at least. And paying yourself as an owner is gonna be a expense line item on your cash flow forecast. So every quarter, when you get to the reforecasting, you need to have a accurate look at that line item. Am I gonna have enough revenue next quarter? Am I gonna have a big massive expense next quarter? So based on those decision on the business side, then you can adjust your paying yourself. If you're gonna have great amount of revenue with little expense, you can pay yourself a little more and enjoy the freedom. But if you're not gonna bring any cash into your company next quarter, or you're in the reinvesting season, it's better to adjust a line item and reduce it. So it's all going back to the forecasting, budgeting, and reviewing, which is at least every quarter. My final advice is talk to your CPA, talk to your CFO before making any decision. Paying yourself, it might be just a transfer of the bank account, but has a lots of tax consequence. It's a lots of future consequence on your personal side and on business side. Don't guess. Consult with your CFO. Consult with your CPA. They know your financial situation very well. They know the IRS code. They know the your personal financial. Make sure to talk to them and then you make the decision and adjust the decision every quarter. And if you pay yourself wrongly or incorrectly in the last few years, it's not the end of the world. You pay your taxes on your annual tax return. You might pay the extra taxes, or you're probably gonna get the fine from IRS at some point. But the past is past. We can actually fix it for future. So it's not the end of the world. Talk to your CPA, talk to your CFO, reach out to us. We can help you out, and you can plan it for future. Don't fix on the event in the past. I'm just saying so you can fix your financial right now and plan for the future. With that, thank you so much for watching. My name is Haas, one of the partners at the firm. Today I talked in detail about how you can pay yourself. It means a word to us if you like, subscribe, drop a comment, share this podcast with your future. If you put a 5-star review, we really appreciate that. Thank you so much and catch you next week.